Want to pay less in taxes or feel like you're paying too much? There are opportunities to control and reduce your tax bill, but most people don't realize them or utilize them. We're going to be talking about taxes today on Financial Focus with the founder and president of GulfCoast Financial Services, John Kuykendall. GulfCoast Financial Services has been named Best of the Best in Financial Services 9 straight years and running by the readers of the Lake City Reporter, and more than 31 years serving proactive North Central Florida savers and investors. One of the missions, John, of the firm is to help your clients make sure that they are not overpaying in taxes, which is on a lot of our minds this time of year.
Well, Peter, while we were working, we're really not concerned about taxes, and that's the situation with me. But when I got older and I started working with retirement and working with retirees, I understand that taxes are the most important thing that we can work on. We need to control taxes, and there are some things that we need to do before we retire, and there are some things we need to do after we retire. And so that's why I think that in our income plan, our financially focused income plan, it's one of the most important things that we can look at.
Now, John, GulfCoast Financial Services actually has a sister company, a partner company under the same roof and umbrella, GulfCoast Tax Advantage. Is this something that is advantageous to your clients?
Oh, Peter, you bet. A couple of years ago, we decided that we needed to do a better job with tax planning. And so we bought several software programs and started using them. And as we developed that software and as we worked with it, I decided that having a tax practice for our clients was one of the most important things that we could do for them. And so what we've done is open GulfCoast Tax Advantage so that we can prepare our taxes for our clients and at the same time counsel with them for next year, because we want to be proactive, Peter, not reactive. And also during the year, we meet with them. And if they make any major decisions or major purchases, we want to know about it so we can talk to them about how we're going to fund it and how it's going to affect their taxes.
John, there's a big difference between tax preparation, which is preparing the documents, basically tax filing on that April 15th deadline or by that April 15th deadline, although it is the procrastinator's official holiday. There is a big difference between tax preparation for filing and then tax planning and looking forward. One's looking back at last year, one's looking at the years ahead.
Well, that's right. What we've done is one's already happened. We've already created that tax, whatever it is. And there's very little we can do to get out of that. And so what we try to do is tax planning so that we look at next year and the years after, and we work to plan for that. Right now, we're very active in trying to plan for the sunset of our current tax base, which is 2025, December of 2025. We get a new set of taxes. And so we're working with our clients now to make some moves, do some Roth conversions and other things so that we can take advantage of it while we can. These low tax rates, taxes are on sale now compared to what they will be in the future.
And we are actually in a pretty historically low tax environment. So this arrangement that the baby boomers have made for the past 3-4 decades of waiting until later to pay taxes on those retirement accounts may have been a very good, very advantageous relationship, but or arrangement rather. But when we look at where we are now and what is likely to happen in the future, John, it may be a time to change that paradigm and really take the planning and the payment of that deferred tax bill seriously.
Well, for the last couple of decades, we've been in very low interest rates. We've been in an advantage to defer taxes because taxes have been low. As you know, in World War II, in 1945, the highest tax rate was 94%. For the highest taxpayer. We haven't seen that in a long time. And so we've been blessed, we're spoiled. And so that's one reason we haven't had to do a lot of tax planning is because we've had low rates, low taxes, and everybody's kind of, manana about it. We'll do it tomorrow, procrastinating. Well, that's over. We've got historical high debt We've got historical high interest rates for this period. And so we're paying more for our debt. We're creating more of a deficit, and we're going to be having to tax more and more in order to pay for it. The only two ways we can pay for our debt is to quit spending or raise taxes. Now, if you think, Peter, that the government's going to quit spending, then, I'm on your side. You just convinced me.
Well, John, as a client is coming in wanting to get everything together, get ready to do the preparation and file the taxes for last year, and then that proactive phase of planning how to manage taxes into future years, what do they need to compile and bring along? What do they need to have, and what needs to happen?
Well, what we need to have is all of your W-2s from all of your employment, your Social Security, any pension withdrawals you had, your investment information, that the company's 1099s that they send out at the end of the year, and any deductions. Right now, we're blessed with a high standard deduction, so most people can't itemize because of the high standard deduction, $13,750 for an individual. But in 2026, all that's going to go away, and so we may be back to itemizing. So we need to get still in the habit of keeping those receipts and keeping those deductions, even though we may not be able to use them, because in the future things are going to change. One of the things that we do, Peter, is we take your taxes from last year, and we prepare and send you an organizer. And in that organizer, it will tell you what we had last year for income from Social Security and all the different components. And then all you have to do is make sure that you get them. We've had, it's always interesting when the client brings in an extra Social Security statement at the end of the year and says, hey, the IRS told me I didn't pay enough tax. And we have to go back and do an amendment because they only gave us one Social Security check instead of two. We try to catch all of that. But right now, from January to April 15th, crunch time for tax preparers. And so we're spending every minute we can, plus weekends, trying to get taxes done as fast as we can for our clients. And Laurie, who works in that department, is really dedicated in making sure that she catches everything and makes me go over everything with her to make sure it's pretty right.
Now, another set of financial maneuvers that have tax implications, John, that you always talk through with your clients are rollovers, contributions, or conversions. And this is a big part of the tax planning. And also, by the way, a huge opportunity that opens up at the age 59 and a half milestone.
Well, that's right. And what you can do at 59 and a half is we can do rollovers mostly from your 401ks in most cases, and diversify your portfolio, give you more diversity and less risk. We can take that and use that going forward. We also, one of the things we like to work on, Peter, is charitable contributions, because at age 70, when we're and after, when we're working on minimum distributions, we can take that charitable contribution, and if we give it directly from your IRA or your deferred account, it will count for your a portion of your required minimum distribution, and we don't have to pay taxes on it. So it's really great not to give your after-tax dollars to charity, but give those pre-tax dollars that you're going to be able to give away without paying taxes on. And so that's just, something the IRS has given us, and we encourage all of our clients to use that.
Just a few of the strategic moves that can help you to control, reduce, minimize, or eliminate unnecessary taxes and pay less in tax. And again, ladies and gentlemen, the benefit of having the cooperation, the coordination between GulfCoast Financial Services and GulfCoast Tax Advantage is that you've got experienced, qualified professionals looking at your situation from both sides: the financial maneuvers for the years ahead, the tax filing, planning, preparation for last year, and then how to place yourself and your assets strategically to control and minimize that tax bill. If you would like a complimentary review, a written, financially focused income plan for your retirement, along with that tax analysis, pick up the phone, give them a call, 386 386-755-9018. That is 386-755-9018, 386-755-9018. And John, can't leave the episode without mentioning your book, Quitting is for Winners, Retirement's Not for Wimps. Taxes are not for wimps either.
That's right, Peter. And let me tell you something. It's not easy getting old. I mean, we have the lumps and bruises and, the aches and pains, but we've also got taxes and we've got IRMAs and other things that just hit us every day. And it's not easy. Retirement's not for wimps. Getting old is not for wimps. And so we need to be as proactive as we possibly can to save every tax dollar that we can save. And there are some strategies to do that, but still pay our fair share. But we don't want to pay more than our fair share, Peter.
Indeed. Well, again, ladies and gentlemen, there are strategies, there are opportunities to control that tax bill, and there are tax law changes on the horizon. So now is the time to act on those strategies and opportunities. Pick up the phone, give John Kuykendall and the team from GulfCoast Financial Services a call, 386-755-9018, 386-755-9018. John, always appreciate the time.
Thank you, Peter. Great to be here. And let's get back on those taxes. Hey, if you'd like a copy of our new book, Quitting is for Winners, but Retirement's Not for Wimps, I encourage you to click the link below and get your copy today. Hey, we like it when you listen to the show, but we like it better when you like, share, subscribe, or feel free to leave a comment.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities, Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services, Inc., a registered investment advisor in Florida. Gulf Coast Financial Services, Inc. is not affiliated with Kovac Securities, Inc. or Kovac Advisors, Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors, including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.